There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
So always make sure to change the date. Tomorrow's the 27th. So as far as the month goes, I know you were missing my calendar days, but we're on such a tight schedule these days with different stuff. And in fact, I got to buy a couple of cars, and half a house full of furniture has been taking up a ton of time, in addition to starting up first downs. I appreciate everybody bearing with me as we move to Florida and hopefully integrate well. But tomorrow's Monday the 20th, Monday's the 28th, the last day of the month. Okay, so it's going to be some window dressing that typically goes on this day. Do remember this is a shorter month. As far as news stories goes, I don't know that any of this matters with the exception of right here. Now, obviously unemployment, typically, historically, for a big chunk of the last 50 years is one of the largest stories to come out in terms of news impact. It is typically red number one, right? And then anything related to any central bank is also red number two. But everything's absolutely taking a back seat to the crisis in the Ukraine. And who would have bet money the China cutting off of some of Russia's banking ties would have even crept into the discussion, right? I couldn't have read a script in Hollywood that would have portrayed that. That was actually a surprise. Not sure if that had anything to do with some of the face-ripping rallies, which they're saying that they are dead cat bounces. And I'll go into that a little bit for you. We will see. So, unemployment rate Friday, keep that in mind, 8:30 a.m. This will be interesting, okay? So, the key thing I think you got to take out of Chairman Powell's discussion is he doing an about face? And they can't raise interest rates because we have global unrest coming out of a pandemic, right? It's an election year. There's just so much standing in the way data to control pricing and monetary policy, right? So right now they're not living up to mandate number 2, in my opinion. And that is keeping a stable and low cost inflation marketplace for everything that we can control globally in all the different sectors, right? But that's not happening. You know, we're seeing it everywhere, obviously. Went to buy a bunch of furniture today. Half the stuff isn't even in. I mean, it's sitting on a boat in Indonesia somewhere. It's going to take like 2 months to get here. It's ridiculous. Any case, got to tell you, I've been real impressed with this Rooms to Go place. This is like a monster furniture retailer in the South. Any case, as I digress, let's take a look at the futures charts daily. So I had a client that came to me in an email and basically said, hey, you know, I have clients that listen to some of these forecasts and stuff, and they most of our clients give a rat's ass about any of this stuff. That's why they hire us. But in all fairness, it's fun to have a client sort of come completely out of left field on you, right? And then ask some questions. But their question was, how on earth did you know um, that was going to take place? And it isn't any great insight on my part, right? It's just understanding the last 30 years or plus of market movements in relation to geo events. So what am I talking about? Talking about this. Okay. This is what you call a face rip rally. Why is it a face rip? Because it just comes in and rips the face off the shorts, right? When the bombs start falling, this is almost 6% in the S&P. We'll talk about the currencies, but I've noticed a lot of our subscribers are taking, especially since for those that have accounts at LQDFX and a couple of the other brokers, they've really increased margins on in the case of the US 500 or the US 30, which is nothing more than the stuff I'm showing, or the US 100, which is the Nasdaq. They've increased margins, so it's essentially added a whole bunch more risk to trading this stuff. They, in some cases, at least with LQDFX, they've gone from 10 to 200 margin, which is crazy, right? Any case, this is the face rip, and this happened in a lot of global equity markets, and it was really not a surprise. And I talked a lot about this the last couple of weeks. As markets selling off, we saw almost a 10% correction in the S&P. Not quite. That would have taken us, but we've seen a pretty decent correction. So, and here the reason I'm showing this is why the old faithful of my Bollinger Bands nailed it again. See how we got way down here, touched past, which was a big area. If anybody recalls maybe some of my discussions from 4 or 5 months ago, but there was a number of missing notches down in this area from the auctioning perspective. So I won't talk too much about auctioning theory, but it's mostly what I'm known for out in the financial advisor world. But the cool thing is that auctions almost always, if they're complete and accurate, and they're not run by a bunch of third world banana republics. An auction in its perfect example is the last. You're probably saying, well, what the heck are you talking about, Steve? So actually, you know what? Let me go out of this screen. Let's go into the weekly. I'm not sure how well we can see this. Maybe that's a little easier to see. If you really can't see this, I'm actually on my little laptop, so it makes it a little prohibitive to kind of show you this. But if we were to look at the auctioning process on the profile chart, which is on the left-hand side, you'll see that there was actually from a long time ago, this is over a year, it's actually a bunch of missing notches down in this area. So it was also a huge area of support from a long Bollinger Band strike, right? So no surprise, the strikes took place in Ukraine. Our hearts, by the way, at Auvoria go out to any of our Ukrainian subs or Russian. We think y'all should just get along and settle it out already, right? Also caught a note, which I thought was interesting. In the, I don't know how this plays in anything other than just sort of explaining from a macro view what's going on over in Europe, but there are some people betting that Ukraine will actually win this war. Sounds crazy, right? I guess they've got close to quadruple the forces and a whole mess of residents in the country that are basically willing to jump in. Plus, there's like massive protests going on in Russia. So maybe that's the reason the market rallied, at least in equities. Maybe that's the reason maybe it was totally oversold, but I always look to areas like this as a buy. So we were actually in here buying hand over fist the last couple of days when it hit down in this area. So we're a little heavier in equities now, but we're probably going to see a pretty ripping rally. Let me just get back to zero here. All right, so enough of the equity markets. Let's take a look at the NASDAQ. Let's go back to daily. Reset. And you can see how there's another mark. So just be careful for those trading this called a dead cat bounce, meaning that we'll go up and barbecue the shorts. You know, everybody thinks the correction's over. And that's typically when the reversals take place to go back down and test the bottom. It was also a vicious sell-off. So many times when you have such a large bounce, it's called dead cat for a reason, because that quite oftentimes the market will come back down and visit the same area again. Is really all I wanted to say. Let's take a look at the bond market flat. I use these two ETFs as representation. Let's move into currency land. And again, no surprise here. Daily chart, back up, and just a ripper. So I said, but I'm not choking on myself. I said a couple of weeks ago, I really wouldn't have been trading. It's just me, right? These are big moves, and they are unpredictable. And there's no way for me to have any course of decent prognostications. Most of my stuff, it's just you throw it out the window, right? So we can use it as an educational, but you had a coiling situation. No surprise, we went back up, ripped almost a full $1.50, and they came sailing back down when the market ripped up, right? Hard to understand how these correlations, you have oil and equities that, regardless of someone's perspective, in my opinion, they are sort of leading the world around in terms of movements. So it's really a case of the tail wagging on the dog being the currency markets, in my opinion. But they're very unpredictable, and it's hard to derive any sort of semblance of normalcy from these types of movements. So the best thing to do is when you don't understand, and maybe if you're not as daring or as willing to go in and step talk about, it's best to just sit on your hands, right? Not the type of advice someone typically wants to hear from a trader, but I spend more time telling people not to take trades, at least I certainly do with past students, than to take trades, right? I prefer the extreme outs, right? So an example of an extreme out move was certainly equities in the last week. Haven't seen some of those levels in a while, right? As we've been on a complete stair step up move from the dramatic changes in central banks since the end of Q1 of 2020, when a 35% correction turned into just a massive rip for everyone that was positioned shorts globally up until essentially now, right? So it's almost been 2 years of straight up without any serious correction until now, right? So now the question is, where's the market's going to head now? The max pain trade, in my opinion, which is typically where markets want to go, is back up to the highs, which doesn't seem logical, right? But oftentimes markets will do the most illogical thing, even though they may be irrational and completely priced in terms of their movements. Generally, these are the unscrewed with active liquid markets, right? Not all the craziness that goes on in some other areas, especially in unregulated crypto. Let's take a look at the euro. So no surprise. Do note that, and I wish my roller ball, my mouse doesn't seem to be working very well. Let's try it now. There we go. Very cool. This is why I prefer a gaming mouse, I gotta tell you. Alright, so yeah, okay, here we go. So if you can see this area, took me like forever to find. See this area, one spot 1130-ish, pretty big support. You can look all the way back and see, but interestingly enough, I don't know how many notches are missing, but you can see some missing notches right in here in the auctioning. This would be right where the Bollinger Band is. This would be one hell of a move higher by the dollar, in my opinion. But keep an eye on this area, which is also a Bollinger strike as well, from a extended or oversold, which would more than likely be a strike on the upside of the U.S. dollar. I'm not going to spend a lot of time on this stuff because other than just seeing patterns and giving you guys teaching opportunities, almost everything I'm going to foretell is probably going to be completely wrong in terms of short-term movements because we just can't, we have no idea what's going to happen in Europe. You know, I probably am not as plugged into what's going on in Europe as I should be, but you know, the thing is Ukraine is a great country, and that's why Putin hates him, right? He's democracy's working in a big way there, and he just doesn't want that to happen, right? He wants that totalitarian power, right? Whatever you'll call his sophisticated form of government, which is just mostly a pile of crap, in my opinion. Um, it's a threat. So, but it's just another great example where democracy will eventually make its way throughout most of society. Eventually, every country probably on this planet, including Cuba and North Korea, as I told my kids, will more than likely become democracies in their lifetime. So, any case, and that's a lot better the old days of the Spanish Inquisition cutting your heads off, right? So, any case, what else? Take a look at the daily view of the pound. So, no surprise, right? Big dip as the dollar did a total rip. And this has a tendency to what's called clear out the queue, meaning there are lots of stuff was probably stops down. Most of the currencies from at least the dollar pairs have went out and took out the queue. Right, it's called clearing the queue. Usually, if you're clearing the queue of stops that are just sitting out there in pockets of different areas, that's usually a much less riskier time. Even though these movements seem extreme, we've probably in many of these cases cleared out a lot of long-standing stops on both above and below the markets. And I talked about this a fair amount, probably not this year, but I talked a lot about in the last. There's a whole host of what's called stop hunting algos that are essentially just put in different markets to terrorize both longs and shorts. And many of these are high frequency trading systems that are what's called stop hunters. They're looking for pockets of stops and they'll try and push the auctioning process into and just go blow out all those pockets and completely reverse the market, right? You want to be aware of that. Typically, I prefer to be riding the coattails of that train, not trying to step in front of it. Well, the problem with that train is it goes by you so fast, it's hard to grab hold. What else do I want to look at? Not really seeing anything that stands out here of note. Take a look at GBP CAD. Look at that. So I haven't had a chance to look at this last couple of days. Don't hate me. We've been busy. Um, the beauty of these squeeze zones, huh? That is just some good stuff. I mean, to the T. Went up. Obviously, pounds sold off in a big way, mostly due to the dollar ripping, right? That's why I always like to discuss when you're looking at just doing just real general, just glaze over quick technical analysis. I always start with equities, take a quick look at bond markets. You can look at commodities. Not going to really matter as much as far as if you're only a currency trader, but you notice I spend a lot of time trying to get you guys to look at all markets, right? You may not necessarily invest in other markets, maybe just equities, right? Outside of, you know, trading currencies or doing a little bit in crypto as well. So, but this is the Neo, and I must be a little more plugged in than this. But the pin action starts, in my opinion, with the U.S. dollar and its relationship to the pound before I even go to this, right? And because if you just looked at this and you didn't know what took place generally with the dollar, right? To dollar GBP, this means it's a little easier to sort of figure out, I guess is my long-winded trying to say. So now more than likely this whole 1.7 area is actually pretty big support. That's a big one, isn't it? Yes, it's crazy. Look at that move in gold. Actually, you know what? I shouldn't even do that. I should always just show the spot market because it's easier to see how banana some of these moves have been. So big area of resistance, blasted right through it. And man, it's just like, obviously gold is a safe haven that typically in unrest, right? I don't care if it's war or the meltdowns of an economy or obviously the pandemic has led to it, but for a long period of time, and we're talking here, at least in this upper crust area, gold just hasn't rallied like it probably should have through some of these unresting periods. And what that tells you usually is that there is somebody that is, or a group of somebodies, right? Other time frame players, institutions, that any time it gets up there, they're selling. When I'm not sure how to read that other than just generally there's a bunch of sellers up there. And until we've exhausted those sellers, every time we go up into the area, and this applies to any chart that looks like this, um, it's like until proven essentially guilty until proven innocent, right? So it's the opposite. Because a lot of times I wouldn't trust this based upon everything I'm seeing here. I'd have been a seller up here too if I was really overweighted in this. And we had a rather large new client come in with huge positions he holds in gold at Roslyn Capital. And we were basically saying, look, you're 35% overweighted in gold. You need to sell some of this off. Take the opportunity of this rally to do so. Unless you think the Earth's going to come apart, in which case you should be all in gold, right? And what else? GBP NZD for those lovers of the New Zealand dollar. You can now buy more British pound. Haven't looked at this one, but look at that stair step in quite a while. These are all weekly charts, by the way. So let's just go back down and take a look at gold from a daily perspective. So look at that. I mean, what am I seeing? $80 rip, right? A little less. Yeah, about an 80. That's crazy. This is the one I think is headed for a clobbering. We hit that century mark, by the way. Actually, did we get up there? Yeah, it looks like it traded just a little bit over, right? It's the high of the day. Oh, look at that. Look at that, 100 spot 54. That's crazy. This is probably the time to get short right here. I'll hold that trade for a while. I think we'll probably see this down in the 70s and 60s. This is our sort of long-term support right here. I haven't really looked at oil in a while, but when things start to get up into those bananas levels, or the nosebleed section as we like to call it, it's time to start maybe looking to take positions. They'll probably go back and test it again, maybe. Probably maybe a little bit of an opportunity to hit an ETF that's double short oil. Let's put a little bit in. Just a thought. So let's take a look at the coinage. That is the Bitcoinage. So this is the long-term chart. Although you'd think that, well, looking at like 2.5 years, Steve, it's not that long term. Kind of seems like an eternity in crypto land. So you guys see this is a weekly chart. Still got pretty good support right in this area. Notice it's, we've got probably the lowest we've seen is 32-ish. If we have another liquidity crunch, this is probably going to drop all the way to 20. This seems to be right in here would be the long-term touch, which is the last of the moving averages down here at this 200-day line. Notice we had a cross here, right? Continued down. For those that understand a cross, you can Google it. We've had a drop down. Be much more interested in taking a crack at this if we hit this 20-ish area and spent some time bouncing around down in this area. Tight range is what I'd want to see. A good basing pattern play out. Could take some time. I would not, if we were really getting hammered, I would not be stepping in and trying to catch some falling knife unless you are so rich it doesn't matter, in which case you can avoid most of my advice as your risk manager. So what else do I want to talk about? So don't forget about Chairman Powell. This will be one of the ones it's actually pretty cool in our office. Now we got cable everywhere, but we get the streaming systems hooked up on all our TVs, so you don't have to have cable wired throughout the whole office or like your house, like the old days. The streaming is actually really cool. Yeah, I think that's pretty much it. USD CAD. Just want to show you nothing's really going on here. Remember, this is a weekly, so back down inside a tight range. So it actually probably been a pretty decent short up here. Even tighter range. Aussie US dollar. Yeah, I think we're good. If you choose not to trade, I won't hold it against you. Cash is a position. If you force yourself to trade, I can promise you, like the casino, in the long run, they will take your money. Steve Vetterl, wishing everybody a happy week. May the trades be with you. I'm off the mic.
There is a substantial risk of loss associated with trading Forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.